Varroc Engineering has more often than not taken the acquisition route to higher growth. But growth expectations have taken a hit as auto markets, both domestic and global, struggle to find some grip. One bright spot could be better margins in the global market, where Varroc boasts of Tesla, Audi and Volkswagen amongst its clients. To help us understand the factors at play, joining us on the phone line is the Managing Director, Mr. Tarang Jain. Mr. Tarang, thanks very much for joining in. Let's talk about the opportunities now, since we're talking about this big open opportunity in the global markets versus the domestic market, where the pain and pressure point has been quite prolonged by now.
Thank you. See, in fact, I would say globally the markets are weak. So in fact, since the last, I would say, 8 or 9 months, globally, I think almost every market is down. Even the North American market, which was growing till about December, has also started degrowing, from January onwards. China degrew last year, since the 80s for the first time. So it's not just the Indian market where we see, kind of pressures, on growth. It's actually global market as a whole, where we are seeing, kind of a degrowth in almost all regions at present. And as you know, the future trends of electrification, shared mobility, connectivity, is not really helping also, growth in the automotive market going forward.
So what, according to you, is going to drive growth for you going forward, particularly considering that Europe forms about 41% of your exposure in terms of markets? If you're saying globally things are looking soft as well, where do you expect the growth to come in from?
So, so we are not, so at the moment, see, what we are doing is that we are looking at market share growth. So we have done very well the last couple of years when we talk about a global lighting business, which is almost 62% of our revenues. We have won in the last 2 years 405 million euros in the FY19, in FY18, and about 462 million euros of new business wins and re-wins, in the last 2 years. And today we have a 4% market share, in the global car market for exterior lighting. And we are looking that, within the next 3 years, they should move up more towards the 5% kind of number. So we are looking in this kind of a situation, we are not really looking at, too much of growth in the auto market, because presently there are too many, macro events at play. You have the China-US, trade tensions, even, disagreements between, US and Euro, new rising fuel prices, new EU emission regulations. So there are a lot of things at play, So the only way out is kind of, market share growth. And to protect our margins, we are looking internally. We're looking at efficiencies, because in this kind of an environment, cash is king. So we are looking at internally operational improvements, purchasing efficiencies. So we're looking more inwards, Of course, keeping also in mind that we need to grow market share at the same time.
Okay. Just one question on how you intend to capitalize on the BS6 norms once they kick in, considering you already have a few joint ventures in place, one with Del Orto, the other one, Herarius in Germany. All of these, how are they going to, back the transition into BS6?
Yeah, so so we do see a good growth, through BS6, because a couple of components, there's more of a value add, in the current some of the electrical products we have, and also further, like you said, that we have got these two kind of collaborations, one with Herarius for the catalytic converters for BS6, and other is on the electronic fuel injection with Del Orto of Italy. So these two, I think, product groups and these two kind of collaborations are going to be very critical for us. So we do see actually, irrespective of what the growth in the market is, we will see quite a decent growth, at least on account of the BS6 regulations from January 20.
Hi Tarang. If one were to look at the auto industry globally, the environment is tepid, which is very clear with the kinds of numbers that we've been seeing. But tell us, for you specifically in terms of your international business, which did outperform the domestic business in the fourth quarter. After many quarters, we saw the margin expansion coming by. Is there a threat now going ahead with regard to Chinese market due to emission norms or because of trade war fears?
Yeah, so I think that today one of the most important events which has to be resolved is the China-US trade tensions, because of which the sentiments are quite down, and both the markets, whether the US or China, they're both suffering, and because of that there is, of course, a kind of a trickle-down effect on the other regions of the world. So I think that's one single most important, I would say in my view, factor in the growth not really taking place in the global car market. So where we are concerned, I would say that yes, the fourth quarter was good. Normally the fourth quarter, Jan to March, is always the strongest quarter from a point of view of revenues and margins. To be honest with you, this first quarter also we have not seen much of a growth, because China, which we were expecting to grow better with some resolution between the US China trade pact, that's not happened. So China remains weak, is one of our most profitable markets as such. So therefore I'm saying that today, I mean, we are, though the markets are down globally, including India, but we are going to see a small growth. We're seeing a small growth, at least for ourselves. Like India is also down 10%, you see April and May, but we are still a little bit up. So the thing for us is that, yes, whatever the growth is, we can't control our sales, but we can definitely control our costs, and our cash flows. And that's something what we are working on internally at the moment. But of course, at the same time, I mean, new business wins are very important. So we are winning new business. We have the confidence of our customers, both globally as well as in India. In India too, TVS is a new customer for us. So I think we're doing pretty well on that front, to grow our market share, cross-sell our products. So those kind of things are happening very well for us. So we feel pretty confident, in the sense from the point of view of our future growth going forward.
Tarun, the guidance given by company for FY20 for both domestic as well as international business is 10%. You've already highlighted quarter one has not been that great. So are there any chances of not meeting the guidance? Can the growth be sub 10% as well?
So, we have to see. So, yes, I mean, talking about so far, yes, we have not seen the kind of growth we expected. But we just cannot write off the whole year because, there's still some open points like what I mentioned, China, US, India too. I mean, we are hoping, though, of course, we're not very sure whether there's going to be a stimulus, through GST, for the auto sector. But also if it's not there, we're looking forward to the season time, October. We do feel the season will bring in some kind of growth this time. There may be a BS4 vehicle buy, so we are looking at growth, and also the BS6 components when they kick off in the last quarter of FY20. So we are going to be looking at a good growth. Yes, I do agree, that the first, so far, we have not seen much of a growth, though, of course, though the market is down, we are not at least down, we are at least up, I mean, as a whole.
Okay, certain plants, Tarang, of the company have been making losses. I believe the Brazilian and the plant in Morocco, we've seen losses coming by in the last few years. So what's the status there? And also you highlighted that you will be looking to curb on the cost in order to sustain the margin growth. And the company was also looking at backward integration. What's the status of those plants? Can we expect them to break even in the current fiscal?
No, so see what happens is that the plants like Brazil and Morocco, see, these are new plants, and what happens is there's a 2-year cycle, for a lamp development, and we have to be ready for SOP in the global markets almost a year before. So we start investing, before. So our investments, come in place in the global markets we start investing almost 1.5 to 2 years before SOP. So I don't really see, I mean, we're not going to see, sales happening to a great extent this year. But yes, from 2021, we will see both Morocco and Brazil, and some of the newer plants, this thing coming into profitability, but not this year. But having said that, we still expect to kind of grow quite well, our margins in the coming year.
Just one quick question, Tarang, before we wind up this interview.
And just one more thing on the backward integration. So one more reason where we expect, a better profitability from the year FY21 is that we are backward integrating into the electronic space for our lighting business. So that's extremely important. So almost about 1/3 of our electronics buy will be now manufacturing in-house, which will give us, almost a 10% extra margin. Of whatever we were buying today as assembly, and we do the assemblies ourselves. We do get an extra margin out of that, which will help our overall profitability from FY21 onwards.